What's the most unique idea that you've heard about AI till now that you might have invested or not have invested in, but you've heard about it?
Well, I liked it the most, and where 100x has invested is something on generative AI.
Welcome Utpal to So What's Next. Today we're going to talk about VC, the whole ecosystem, startups, and we're going to talk about what's next that's coming in the next 5 years. So I want to start off with you, like telling that who you are and what do you do and why do you do it.
Okay, so mine is a completely different journey. By qualification, I'm a chartered accountant. Post qualification, having spent more than 2 decades working with big fours, in a different area. That gave me an insight on how the whole supply chain works, how whole corporate system operates, how cross-border transactions are done. That was my core domain area. Interestingly, what happened is way back in 2015, I actually bumped into Sanjay, become a good friend, and I was trying to understand what is he doing. He mentioned about he's investing in startup as an angel investor, and I was wondering what is angel investing, what is the VC world. I spent almost 2 years with him trying to understand, and then decided to take up lunch that why can't I also become an angel investor. So the journey started from there. I decided that, okay fine, the ecosystem is moving so fast and it's robust, so why can't I move full time into it? And I was having word again with Sanjay, and he said, Utpal, you have done your job, you know how the corporate operates, what's their mindset. Simultaneously, you have invested in startups and you know how they operate and what is their mindset. And what we are up to is basically bridging that gap between corporate and startup, doing a partnership between them, which basically helps both corporate and startups, but economy as a whole.
Right.
And that's where I joined, 100x VC, where I lead corporate venture capital, which is a service where we work with corporate. We help them partnering with startups, engaging with startups, which eventually, it starts with, a partnership, a business partnership, probably an investment, and eventually, scaling it up together.
Right.
So that is what we are doing, and I'm leading that at 100x.
That's great. You're a partner at 100x VC. So obviously, there's a lot to talk to you about. I started following the startup ecosystem in 2020, COVID and post-COVID, I've been following it. And I've seen startups come and go. I've seen the whole valuation game being played. And I actually wanted to have a VC perspective on this, that when you see the whole valuation game being played, how do you actually differentiate the one startup that's trying to play that game and the one that's actually like genuine?
Okay, so I think so. Let's just first understand who are the players in the whole ecosystem and who dominates the whole valuation game. You look at the first investor are basically angel investors. That could be individuals, that could be HNIs, that could be family office, who basically works as an angel investor.
Right.
An angel investor partners or invest in a startup's journey for almost 3 years, 5 years kind of a thing, and they may probably continue to do the same. The journey changes as and when the startup scales up.
Right.
They may continue to grow, and at one point of a time, when they are actually doing the next journey, growth journey, venture capitals, the VCs basically step in and they become investor into a startup because they have a muscle power, they have financial power. So they invest into startup with the finance. They provide the necessary funding to them, which actually takes the startup from 0 to 1, which is basically their journey along with the angel investor. But 1 to 10 is a journey where VCs help them. So this is where it's going to happen.
Right.
And 10 to 100 is the next step.
Right.
And the last mile, I'll call it a last mile, where private equity guys will enter into it. The valuation basically moves accordingly. So the moment, a VC is going to enter, they are going to be an investor in a startup, the valuation will change. Individuals will exit. VC will continue as an investor. That journey from 1 to 10 will see a lot of change of hands between VCs itself, and the valuation will keep ruling.
Okay.
When it again goes to 10 to 100, where VCs will step out and P will take over, again the valuation will change. So the valuation journey works like this.
But now it's changed, or it's still like the same like 2021 maybe?
It has changed drastically, and that's what we generally call it as a funding winter.
Yeah.
So what used to happen in 2020, any idea, anything which an investor believes is a fundable idea, they are cutting the check. Now it's a reverse scenario. Now investors have money. We have enough money power in the system. The issue is valuation. Both investors want to invest, but at a right valuation. And that's where we are seeing lot of changes, lot of things, extended round. I'll say extended round, I'll say down rounds, I'll say bridge rounds. You may see, Series A continuing for 2 or 3 rounds. So those are the things, because investors have become very cautious. and whether the same thing will continue, I'll say we are probably at a fag end of the whole thing changing again.
Okay.
People are now becoming more and more optimistic
Yeah.
around the whole startup ecosystem.
Yeah.
So that's where I see that going forward, the whole valuation game again will change. But yes, now it's a very rational valuation as compared to what we have seen.
Like a fair price more than
It's a fair price,
okay.
absolutely.
Okay, fair. And one more question that I also had was about this was that back then in the last 3 years, since again what I've been following, it's like some of them are choosing growth, some of them are choosing profitability. How do you balance the two?
Okay, it's always a catch-22.
Yeah.
Okay, back in 22, it was always the growth. Growth in terms of number of users, your GMV, the kind of total sales that you are making, irrespective what you are getting in your pocket.
Right.
So there will be multiple supporters, multiple players in your entire sales ecosystem, where let's say you have a total sales of 100, but out of that 100, what you pocket is only 10.
Right. Okay.
But people were looking at 100.
Yeah.
And based on that, the whole investment was
The
happening.
margins are low. Actually.
Now the parameters have changed. Now people are actually focusing on what is the actual money that you are making. Are you profitable or not? So the table has turned now.
Right.
So what we were seeing in 20 is now changed. Now people are more conscious.
So now it's more towards profitability
and
than most
sustainability.
people. Right.
Yeah.
Yeah. Because I was reading this case study on Rebel Foods. And they had a lot of plans. They had a plan this year to kind of open 100 stores or outlets in all over India. They only opened 4, but whichever 4 they opened and wherever they opened, starting with Pune, it kind of became profitable. So again, I think that's the whole model that I don't know if they want to go the founders or it's the VCs and PEs kind of pushing them to be profitable.
Yeah, it's basically both the ways, because they also know that unless until they are not going to be profitable, new investors are not going to step in.
Yeah.
And existing investors are going to push them hard.
Right. So it's a mindset change.
It's a mindset change.
Okay.
It's a mindset change from both the sides.
How do you do risk management when you're taking early stage investment? Like I know you started off as an angel investor. You were angel investing for a long time, and I think you still are. So again, the risk is not defined and it never will be, and you take the most risk as an angel investor. But what is the risk management process, or is there one in the first place?
So there is not defined risk management process, and each investors will have their own parameters of how to manage risk. So when it comes to risk management, I'll probably put the whole answer in my own language.
Yeah.
How I normally do it.
Yeah.
I think the first thing is basically to do a complete deep dive, complete thorough due diligence of a startup, of founders. What I've mentioned, that I need to know who are the founders, their background. I need to know what is their idea, what is their scalability, whether there is a product market fit or not, and whether they'll be able to generate a return for me. That's the most important thing. Having said that, investing in one startup is not enough for an angel investor. You have to spread your risk. You have to diversify.
Right.
And when I say diversify, diversification can be in number of startups as well as number of sectors. And if you do that, because it's a cyclical nature, right? So you are able to mitigate those kind of ups and downs by doing a complete diversification. That is what I follow.
Okay.
The third thing is basically the risk reward ratio. So what I mentioned, that whatever I'm investing, I have to first understand and take a conscious call that whatever I'm investing is a completely 100% return off. If I'm going with that objective, then I will do a backhand process to identify that if it succeeds, then what will be the growth journey, at what stage I will get an exit, and then work out, the return on investment.
Okay.
And that's basically the third thing that I normally do that. Fourth is basically actively engaging with startups.
Okay.
What will happen if I'm going to be a passive investor? I just give them money and that's end of it, and I do nothing.
Yeah.
Then I will lose the track. I don't have an insight of what is happening, but simultaneously what is happening around them also I'll lose a sight. So when I actively engage with the startup founders, help them, nurture them, providing them guidance, and keep looking around, that basically helps me. And probably yes, you can say that that helps me in avoiding any kind of a risk, because I can anticipate what is coming. I can see some changes coming up, and I can actually update the founders, and they can actually correct their course. So this is where actively engaging with startup is going to be the next stage.
Most startup founders, they used to complain that when they raise funding, at least this happened in Shark Tank, and I heard one of the founders say it, is that they'll receive the money from there. Sometimes they might not even receive the money, but even when they do, there's no this thing with the investor. Like there's no conference call or there's no meeting with the investor to kind of guide them to the next steps. That was one thing. Second thing was that most investors like don't choose to kind of just have a passive investment and let startups do their thing. And obviously both things will have the pros and cons, because I feel I would be an active investor, not a passive investor. But most people, I don't know why, but some people choose to be passive investors, and I want to ask you, does that actually work out sometimes?
So again, I'll give my practical example. When I actually started investing, I was a complete passive investor.
Okay.
Because I had no clue around it, and obviously I was doing a day job.
Right.
So I had no time to getting engaged with startups and help them. So that was a passive kind of a thing, and where I lose a sight of what is happening unless until I attend quarterly calls, investor calls, try and understand. But that's once in a quarter. That is not a regular thing. So that does not give me a complete insight of what is happening within the startup or around the startup ecosystem.
Has that ever worked out for you? Passive investing?
It's a double-edged sword.
Okay.
So I have seen a couple of investment decisions which have actually gone right, and they are moving ahead. So it's been like 3 years, 4 years, 5 years of my investment, and the investments are still there.
Okay.
The business is doing well, they are growing. I've seen couple of losses also, which is where you have no control on it.
That's
right?
true.
Because it's not about you helping. Even if you try to help, there are external factors which are impacting businesses.
That's true.
And
why
eventually
actually,
you see
that's a good question actually. Why do most of the startups fail?
Okay, various things, and I think so. You
I
can
know,
you can write a complete thesis around
True.
it, that why a startup fail, and what are the factors or what are the points that they need to be
Definitely,
mindful
you can
it.
write a book about it, but
I'll simply put it two things. I think so, or there are a couple of pointers that we have obviously noted down. I'll just say 2 or 3 things which I strongly believe.
Sure, please.
I think the first thing is basically, replicating what is already a success story. So what is going to happen if somebody, let's say I'm giving a practical example, Byju's. Byju has done well, at that point of time. People have just started following the same model and started creating the same kind of startups, edtech. What eventually happened is most of them actually fail.
Yeah.
Because they are struggling. While there is a business, but replicating the same idea is not a good thing. You have to identify something which is a unique thing.
Yeah.
Second is, if you are basically very early, so your idea is good, but there is no market for it.
Right.
So who's going to consume? Who are basically your consumer?
There's no product market fit.
There's no product market fit. So that's also going to be a problem. Third, the founders need to be very mindful about what is happening with the money. I think so. The financial ratios, the financial working is very important. They need to be very clear each money that they are, or each rupee that they are spending.
Have you ever had a founder who you gave money to and he just blew it all up, like in having fun?
Touch wood.
Yeah.
I have not seen that kind of a thing. Obviously, there will be other reasons because of which, and as I've said, external parameters, external factors which have impacted the business, and the business had to shut down.
Right.
But barring that, I have not seen any such instances. But yes, we have heard so many instances where we have seen founders spending money left, right, and center. And when I'm saying, if it's not just wasting of money, but it's like you have the money. Now you want to basically grow very fast. So what will happen? You'll basically hire the team left, right, and center. You'll basically hire the big guys from the business world with a hefty salary.
Yeah.
Now what is happening? Everything is going to have an impact on your profitability. But is your business growing simultaneously?
There's no
Are you
value.
turning profitable? No.
There's no value add.
That's going to kill the business, and eventually you will see a shutdown.
That's true. Because Mark Cuban had invested in this one startup. Once the founder received the money, he blew it partying in Las Vegas like for 3 months straight. And the startup eventually got shut, but that's what happened with it. So he decided, like Mark Cuban decided never to do that again.
You get many instances in India also. There are founders. So it's a easy money. Let me just put it very simply, because when an investor is putting money, it's his hard-earned money.
Yeah.
He's very conscious about where he is investing. He's trusting the founder. But if a founder, rather than investing that money in the growth journey, if he blows off that money in various other things, then it's going to be
That's true.
That's basically a breach of trust.
Yeah, that's true. And I think you can't really calculate that factor in, because it's very difficult to find out. But coming to founders, I had an interesting question for this. So Kishore Bayani, he's the founder of Big Bazaar. He said that most of the VCs or Ps, and I don't know if this is true, but I want to take your perspective. He said that most VCs or Ps kind of bet on founders that are coming from IIT or IIMs.
You obviously see their education background, because somebody who's coming from IIT, IIMs, it is perceived that they are better equipped, they are better knowledge, and they have a better ability to maneuver through the whole ecosystem and take the startup from 0 to 1, right? But why I say it partially true? Because simultaneously I have seen people not from IIT, IIMs, just graduated from any university or any institution, and they have done phenomenally well.
compared to even an IIT.
compared to even IIT or IIM guys. So I'll not say that it's 100% true. It's partially true because that's one parameter which each and every investor looks upon.
Okay.
That who's the founder? What's the
What's
education
the
background?
education background?
But does that mean that that's the only factor? I don't think so. That's
Okay.
only.
What is the X factor actually? I know there are a lot of like 3-4 factors that you have listed down before, but there might be an X factor, right? That you
There
say.
is nothing. There's as such nothing as an X factor. I think so. It's a mix of all. Okay. When I see founder, so if it's a single founder kind of a company, investor will be very cautious.
Right.
But if there are multiple founders, means co-founders, it's a good team having a complete synergy. Their objective is very clear. Investor will be ready to jump in. Second is obviously what they are creating, what they are up to. That's going to be the second thing. Third thing is there a market? Market here, market outside, where? So have to be very clear about that.
Right.
And fourth, as I've said, it's basically, can I expect a return out of it? Can I expect it? I'm not saying that each and every startup can be expected to become a unicorn, but I'm saying that when I'm investing my money, is it going to generate a return for me and a decent return? Because see, return can be generated in secondary market also. I can invest in capital market and I can get that return.
Yeah.
Is it going to generate something which is phenomenal?
What's the average? Is it 2x?
Generally, you can see, as an angel investor, I think it can be anywhere between 3x to 5x.
Okay.
On an average.
Okay.
Means that's basically what I anticipate and that is what I expect. But there will be investments which can generate probably 1.5x, 2x, less than that also. Or at times you will just cut your capital.
Yeah.
So that is also a possibility.
3 tempting ideas that a founder shouldn't go for in the current ecosystem and trends.
You should not go for it. You have to understand what is the pain point. No, it may be a very simple pain problem and there is no solution around it. But if you identify that and if you are able to create some kind of a solution, you just go for it because you will be able to make a killing out of it.
3 ideas that a founder should go for in this current trend or ecosystem.
Well, I'll not put it as an idea, but I'll probably put it as a trend which is currently happening and where I see a lot of mileage going forward also. First thing is, a fintech.
Okay.
The way we have moved into the digital economy, the way UPI has grown from, one end to another, the way we have started using UPIs or to that extent net banking, everything is getting digitalized. Fintech is one area which is now taking off. It has already, taken part in the growth journey, but this is just the beginning. I believe there's a lot to happen if I really look at, and I can actually segment the entire, I can say supply chain. And I can see, what is from start to end. There are multiple, it's broken, So I have to identify, which is the right thing and basically find out a solution. If I'm able to do that, it's going to be. So for me, fintech is basically one area which is going to grow. Second is a health tech.
Okay.
Health is one where, you cannot do without it. So be it a insure tech, be it a health tech, be it a telemedicine. I think so these are the areas which is going to grow from here also.
Yeah.
While we are a growing population, we are almost, 140 million as of now, and it's going to grow. As and when we grow, I think so the business also has to grow. So I think so health tech is the second thing. A third thing is sustainability. We are now coming to a point that each and every country across the globe is looking at the whole decarbonization, net zero, anything which is touching or creating any kind of a solution around it. I think so it's basically the third idea.
What's actually the big thing that you see in sustainability happening in like the next 10 years?
Decarbonization, I think, will be the biggest thing.
What are startups doing for that?
So multiple things which are happening. Somebody's working on how you convert the whole carbon into oxygen, or probably how you basically generate water, and all these are definitely idea.
Right.
Somebody's working on how you use the carbon credit, so how you generate the carbon credit and use the carbon credit. That is something which is growing phenomena right now.
What is carbon credit?
So carbon credit is when you are basically so let's say you are a chemical company, okay? You are generating emissions. Now that emission is not right. So it's basically, emitting the CO2.
Right.
If you are basically implementing some kind of a system which is actually reducing the whole carbon emission, then you are granted some credit, which is called carbon credit. And that carbon credit is basically resellable. So you can actually sell it in the market, or you can use it for yourself also. So that's a big market out there for carbon credit. People are working on it. So I think so sustainability is one part of it. Fourth, and I think so this is something which is a recent phenomena where I see is basically ONDC. It's going to be the largest marketplace where not just the small retailers, but even the service providers will be able to offer their services, and it's going to be an exchange. I think so. What we have seen, like UPI, this is going to be bigger than UPI, and that's where I see a lot of opportunities emerging going forward. So this is one area where I see a lot of things going to happen.
Can you list down some of the services that are there on ONDC?
Well, anything. So as a retailer, you can sell any kind of a services.
Right.
If you have any kind of a product, you can do it. But as a service provider, like you are basically providing any kind of an accounting services or anything. Those services also can list it. Somebody like Urban Clap also can get listed themselves and then provide those services. So
Okay.
anything that you believe could be bought and sold can be done through ONDC, and that's where I see a big opportunity coming up. The startups who are basically working and going to have an opportunity is more about the integration, because integration is going to get play a bigger role.
Okay.
Or somebody who's basically connecting the retailers or small service providers to the whole ONDC platform and help them doing the entire business seamlessly. I think so this is one area where a lot of startups are already working on it, and I think so this is one area I believe tier 1 tier 2 I think so is going to be a big
No, I think-
market for it.
I mean, I've obviously heard of ONDC, but I've not researched about it well enough to exactly know what kind of potential it has, like 10 years down the line or 5 years down the line. But I think that's a good topic to like even think about, like what is it going to do and how can we benefit from it, people who actually want to start something. Another thing that I actually noticed was that if you look at the basic needs or wants of a human, I think in the Indian ecosystem right now, in the Indian market, that has kind of been solved. So most startups are going for either discount companies or luxury companies or premium brands. And do you think that's fair? Like, firstly, are all basic wants and needs covered? And second thing, if we are going for the luxury or discount companies, while I think luxury might work, but do you think discount companies are a good way to like build a business?
Well, look at the other way of it. We have been used to such kind of a discounts, through Zomato or through Nykaa or anything and everything, which basically offers you a discount. Now, you make them hook to a discount and you continue to do it. That's one. But eventually, again, the question comes back to your financials, your profitability. So as a business, if you continue to offer discounts but you're not able to make money out of it and you're not turning profitable, it's going to be a challenge.
How can discount companies actually make money eventually? Like, how do your Zomatos and your Zepto, Blinkit and all these guys, how do they eventually even turn profit?
So obviously there's a mechanism around it, how they
Okay.
structure the price with the end vendor. So the person who's selling, there's obviously a deal with that. And, I think so. I believe Zomato, or to that extent Blinkit, they earn money both sides of it. So they earn the money from the seller, but simultaneously as a service charge, as a delivery charge,
From
they earn
restaurants.
it from the buyers also.
Right.
So I think so that is where they are making money. But the kind of discount that is being offered, and I believe now that era is actually ending, at least
Yeah.
when it comes to Zomato.
Yeah.
The discounts are out now. I don't think the discounts are still triggering, or
It's
probably
not-
to a limited extent.
To a
still.
limited extent, but
Yeah.
I feel most of them are trying to be monopolies. Like, I mean, that's the ideal case. Why do you have discounts? Is to acquire customers, and then once you acquire a lot of customers, you become a monopoly of some sorts, right? Then you can turn profitable. But I think that's gone horribly wrong for some of the companies,
Yeah, absolutely.
where they try to be monopolies by giving out discounts.
Absolutely. I believe I just take a moment and there's one more area where I believe lot will happen. A lot is happening and lot will happen is the entire AI and ML space.
Oh yeah, that too.
That is going to be again a big push.
What's the most unique idea that you've heard about AI till now that you might have invested or not have invested in, but you've heard about it?
Well, I liked it the most, and where 100x has invested is something on generative AI called Vodex. It's basically a multilingual generative AI which helps a business to complete the entire sales process. So rather than having your call centers having multiple people, it's an automated stuff which completes the entire sales. And it's a human voice. So when you are interacting with the system, it's not the other person on the next end, but it's the system who's talking to you, who's closing the entire sales process. So this is something which I like very much.
That's very interesting. I don't know how people come up with this.
That's what I'm saying. India, people are so tech savvy. The youngsters are coming out with such kind of ideas. They are finding out, a new things. And this is where I think innovation is going to play a biggest role. India is going to be probably innovation hub going forward.
That's true. And do you think someone who kind of solves the supply chain problem is going to be a big game changer?
Absolutely, I think so. I missed mentioning that. But when we say supply chain and logistics, when we say industry 4 or industry 5 going forward, imagine the kind of manufacturing processes that we have been doing so far, all those age-old, manufacturing processes. It is broken or it has various gaps. There are various challenges around it. Those who are actually solving it, will be a game changer, and people are actually working towards it. So supply chain logistics, I think so it's going to be, one more area. So probably if I have to list down those 5 areas which I just mentioned, fintech, health tech, AI, ML, sustainability, supply chain, logistics, and last and not least, agri-tech. I think so it is doing wonders. It will continue to do wonders.
Okay. Agri-tech is also something I have to
Absolutely.
look up. But okay, fair. And last 2 questions that I have for you is that everyone talks about the challenges of like founders and other people in the eco, but nobody talks about the VC challenges. So I want to take your perspective on that. What are some of the challenges that VCs have to face?
Right. So see, people know what kind of a challenges a VC face, and which are basically a generic. Think about something that what are the internal challenges that and I'll not say internal challenges, I'll say both internal and external, and I can give you few things which are internal as well as external, which are not so talked about. I think so first is a deal management. There's huge amount of inflow of deals coming to VCs on a daily basis. How to manage this inflow? I think so this is one of the biggest challenge.
Deal inflow is, can I say, it's your pitching?
The kind of applications,
right.
The new startups, and if I have to just give you a little bit of contextual example, at 100x, on a yearly basis, we must be looking at almost 10,000 to 12,000 applications. So we are evaluating 10,000 to 12,000 applications before we end up investing in around 80 to 100 startups. So you can see the kind of deal flow management,
right.
It becomes a challenge.
1%.
Yeah, so that's basically one part of it. One is the portfolio support. So portfolio support is, when you actually invest, investing is one part of it, but actively engaging with them, helping those startup, connecting them, connecting the dots. So this is so as and when your portfolio grows, it becomes a challenge. Now this is something which is again internal to VC. Pressure to deliver returns. Now most of the VCs who have basically raised the funds externally from LPs, limited partners, who have basically committed their fund to VCs, and VCs basically doing investment. Now they have to generate a return. So generating a return is again going to be a challenge for them.
Right.
Investment cycles, I think so the investments are cyclical, the sectors are cyclical. So to map, continuously observing and mapping, which is the sector which is emerging, which is the sector which is going to do best next, is again a challenge. So this is something which is a thing. LP relationship, I think so what I just mentioned, because one is delivering return, but simultaneously managing that relationship, because they are the people who will continue to fund your venture. So that is something which is that. Competition, peer competition, because a same deal which is a good one, which may be going to multiple VCs. So identifying which is the best one, and then investing into it. So you should be the first mover.
Actually, I had like follow-up questions on whatever you said. One is, let's say, like, talk about the last point. How many VCs, like companies that are there, actually doing good, like actually profitable, or actually making money for investors? Or is it like same case with them, that most VC companies are like not making any money?
No, I'll say, see, returns go up and down, but you will not see any VC not making money.
Right.
Okay, you have to see what is the average return that they are able to generate.
Actually, like beating the average return.
Absolutely. So each of them are beating the return.
Okay.
But the whole thing is, it's somebody is doing very well, somebody is doing probably a lesser than that.
Yeah.
But everyone is there, because when they are investing, it's done after a thorough check, after a thorough due diligence. Some external factors may impact a startup's journey, and that may turn out to be a loss. That could be a possibility. But on a holistic basis, if you really look at it,
they're making money. Okay, fair. And the second question I had was that, how do VCs help startups, like with the whole ecosystem, like of companies that you all invest in? How do you all help VC, like the founders network in that sphere, or that ecosystem of companies that you all have invested in? So how does that happen?
Everyone will have their different thesis.
Okay.
Yeah. So each VC will have their different thesis. If I have to speak about ourselves, first, when it comes to investing in a startup, I think so we have simplified that process. So we are not going by the SHAs, which are basically the legal documents, running into multiple hundreds of pages. We have just simplified it by, the safe notes,
right,
which is a very simplified model. Once we sign a term sheet, in probably 3 weeks time, the money gets transferred to the founders, because that will help to focus on their business. Our job is basically to help them focus on job, rather than, getting involved into all these legal things. That is one part of it. Once they are invested, we actually do the master classes and mentorship session for them. So we'll help them understand, where to focus, how to focus. We invite, people from industries, people from various sectors or basically the doing very well in that respective area,
Hmm.
they come, they teach, they have those 2 hour session with founders, help them understand how to grow, where to focus, and everything, anything and everything around business. Let me
Right.
just put
Right.
it very simply. So the third thing is mentorship programs.
Okay.
So what we do is we mentor those founders.
Hmm.
Anything that they believe that they are stuck, starting with creating some kind of financial projection, some kind of a balance sheet, or understanding, or to that extent connecting with any kind of investor, or any kind of a corporate for business purpose. I think so those kind of a mentorship session, and last 2 things which I mentioned is not really a mentoring, but helping them to connect into the ecosystem.
Right.
So connect them with the right set of investor, connect them with the corporates, who can basically give them some kind of a business, some kind of a POC, is something which is the case.
Okay.
And last, I think so most important, because we are investor and we want our startups to have other investors as well. It's more about connecting these startups to the other set of investors by inviting other investors, and we actually do through our demo day,
Right.
where all our startups, which are basically where we have invested, they make a pitch before the external set of investors, which
Okay.
can include HNIs, angel investors, family offices, corporates, VCs, micro VCs, and we are connected with the entire ecosystem very well, so that we can see that kind of people attending
Right.
both online and offline, and then making investment into the startups where we have invested.
Hmm.
So I think so. In a nutshell, this is what we are doing. But barring that, most of the VCs will be doing the same kind of work.
So it's actually, it does make sense to have a VC on board.
Yeah, it does make sense
Lot
to
of
have a VC.
difference.
So see, I'll tell you, VC has a financial muscle. Okay,
Yeah.
VC will definitely put money into it, but when it comes to what I have just discussed, each VC will have a different thing. If they have a bandwidth, they will do it. If they don't have a bandwidth, they'll just invest money.
Fair. That's what's not spoken about in the media about VCs. Like, they have a very bad image in the media for some reason. If a 21 or a 22-year-old who gets out of college, they want to get into VC, which is again a very fancy job and everything. But the issues that most people have is that these require prerequisite roles, like you have to do an MBA or a CA or some sort. So most people don't kind of have that. So how can they get into VCs? And why is this a thing in India? Because in US that I've seen, after graduating college or junior or your degree college, at 21, 22, people are able to get into VCs and easily. But is this a case thing again in India, or just like everywhere?
No, not really. See, within a VC, there are various roles, and each role requires specific, understanding or a qualification kind of
Right.
thing. So certainly, a bare minimum graduation is a must.
True.
But having qualified in some specific areas, like if you are a chartered accountant, or if you are MBA, you know the finance very well. Okay, or if you are an MBA in marketing, you know the market side of it very well. So when it comes to evaluating a startup, it requires such kind of qualities, which helps the VC in making it very easy for them to take a right decision. Now, having said that, a 21-year graduate can join a VC or a PE immediately. It's difficult, but I'll say doing few things, one can definitely join.
What
a
are the
VC.
few things? Can you
So
list
okay,
them?
let me just tell you. I think so. The first is basically getting a relevant experience.
Okay.
Okay. So
What do you mean by relevant experience?
okay, I'll tell you what.
Yeah.
See, don't just eye for some marquee positions in a VC or a PE. You have to start as an intern.
Okay.
So try to get those kind of internship, try to gain experience, try to understand, what is happening within VCs, which are various verticals, which are various roles, which requires different kind of experience, different kind of understanding. Understand that. That basically gives you a very good insight into how a VC operates.
Right.
And that is basically an experience which will help you. So I think so that is the first and the basic things that one has to do it. The second is basically building a strong network. And when I say a network, I think so you need to basically attend various events. Try and meet up with experts, try and meet up with people who are from VCs, who are from Ps. Try to create your peer level network, because those kind of a network will help you in getting an entry into a VC.
How do you find these networks?
So you just attend, you just go there, because you know who are the VCs, and everyone is there on LinkedIn.
Yeah.
I think so LinkedIn is one place where it's very easy to connect with people.
Yeah.
You connect with people, just get yourself accustomed, introduced to them, and do it. The third, I think so, is all the VCs or the guys, they keep posting something or another. So try and read through it, try and understand, and probably try and give a comment to that.
Right.
And this is basically just a jugaad that
Yeah.
I'm just telling you. But try to do that kind of a commenting and tagging the same person, so that
Right.
that person is aware
What's
that okay, fine, somebody has read it and somebody
yeah.
has commented. I think so. This is something which can be done
Hmm.
when it comes to building a network.
Okay.
Continue your learning journey. So don't stop it. That okay, fine. Something which I have done. It's good enough. Trends are changing, sectors are changing, technology is changing, and every day you see something new coming up.
Right.
So learning is constant. So don't stop that learning. I think so. This is the most important thing, for a graduate, because this is the area, you are just out of a college and the whole world is in front of you.
Yeah.
This is where you have to learn. Start, analyzing some kind of a startups. The data is available when you are actually, attending some kind of events, startup events.
Right.
A lot of startups are pitching. So try to understand what they are doing. Try to create your thesis. Try to analyze them, which will basically makes you, gives you a right set of analytical mind or thought process.
Right.
So this is one thing that can be done. You have to, get the mentorship. So try and connect with people who are into, VC or a PE world. Request them for a mentorship, and I think so. People are very generous. I don't see people, unless until they don't have a time. That's a different thing.
Yeah.
But I have seen generally people are very happy to share their experience, guide. That's very
Yeah,
easy
that's
to
true.
that's very easy to get. I think so. Graduation, obviously, to gain more knowledge and gain that kind of a particular position is one thing which I believe, and where we were discussing about doing an MBA or a CA or CFA kind of a thing. But last and most important thing is create the value. I think so. You have to create your own position. You have to be someone who also is known into the ecosystem. That okay, fine, this person is basically a subject matter expert, or this person knows about it. So tomorrow, if not just a PEVC, but if some a startup founder needs some kind of a guidance, that person will come to you.
It should
I think
be.
so those kind of a value, and value is not just you have to create, you have to also give. So I think so go with an intent that you have to give back rather than take
Right.
it,
Yeah.
and that will basically help you. So I think so these are few things, very basic stuff, but this will certainly help a graduate, somebody who's just moving out of a college to get into the PEVC world.
Okay, I think that sums it up well. Thank you so much. Thank you so much for giving the insightful answers, and it was a very good discussion that I had with you. Kind of gave me a good knowledge and insight about the VC world as well.
No, it's my pleasure. I think so. Whatever I have said, I think so. It's just a fraction of it. I think so. The VC system, the whole ecosystem, I'm saying, it's so robust and it's so deep. It's more about the more you get into it, the more you will learn and you will enjoy it thoroughly. What I have done and what I'm enjoying. I think so. Everyone has a right to do that.
Okay. Yeah, I think it's a very big industry, and thank you for being a part of the show.
Thank you. Thank you.